Right. Welcome back. We've got the market, which is blinking red and green, literally 7 points down now. We were up 15 when we took that commercial break. So there is a bit of a tug going on in either directions. We'll see where it settles finally. 17,950 is where we're at for now. Happiest Minds is the company that we are focusing on. The stock's done well recently. I mean, the last news from them was, of course, that they've increased their revenue growth guidance for FY23 to 25%. They're also targeting to grow at a CAGR of 25% over the next 5 years. The company has an aspiration of a revenue of $1 billion by FY31. We have Joseph Anantharaju, Executive Vice Chairman and Chief Executive Officer, Product Engineering Services at Happiest Minds, and Venkatraman Narayanan, Managing Director and Chief Financial Officer at the company, joining in for a quick chat. Thank you very much, both of you, for being with us here. Prashant this side. Mr. Narayanan, if I can start by sort of putting to you what we heard from Wipro just a day ago, which is the fact that they're withholding their variable pay to employees for now. We were talking to an analyst post this on this news item, and he was saying that Wipro usually has a signaling effect, what will follow at other IT services firms. What is your opinion, sir? Are we likely to see this spread, this kind of thing, across IT companies?
First, I would like to say that it seems to be a policy decision, because variable pay, the subject that we're discussing at Wipro, is linked to certain performance metrics. So I'm sure there would have been a policy, a document which has been published ahead of time, shared with the people, saying how they could earn their variable pay, because it's actually performance linked. Performance, both personnel, team, and the company. So there seems to be some variations on that, and that's how I read the news as, which they have said that they would be paying X% of the variable pay, given that there are certain utilization targets which have been set, and upon meeting them, they will get the variable pay. So that's the way I read it. So where I'm going from is these are all company-specific policies, but at the same time, you could see some trends from it, saying that there could be some ahead of time hiring that could have happened, which is what we are reading in the news today at certain companies. And how is that going to play out in the next couple of quarters? Because slowly the supply situation is slowly stabilizing. I think I did stick my neck out a couple of quarters back, saying that hopefully that should start stabilizing in a couple of quarters. And we are seeing very early signals, but not so much on the digital side, but nevertheless, we are seeing it on the IT side. So it could be a mixture of these factors that's led to this news, Prashant.
So, I mean, job growth, I mean, the supply imbalance will be corrected, but at this point, I mean, you don't think this is primarily driven by excess supply or anything of that sort, right? Or growth weakening, or growth prospects weakening, more people on the bench, that kind of thing?
It could be a slight term correction. See, until now, for the last 3 quarters, the question that I was being asked is, your utilization is high, why are you not getting adequate number of people? We can only do as much. Now you ramp up the entire machinery, post that you get in people. There's a lead lag effect, and there are some adjustments that have to happen at the structural level. That's what is happening, is my take on it. But we'll get to know as we progress during the quarter, Prashant.
Okay. Joseph Anantharaju, who's the Executive Vice Chairman and Chief Executive Officer, Product Engineering Services, also with us. Joseph, hi, good morning. Welcome to the show. I wanted to understand some demand trends, amidst all this talk about a soft landing and impending recession. You had increased your revenue guidance for FY23 to 25%. You've also targeted to grow at a compounded growth of 25% over the next 5 years. Are you seeing higher organic growth, or is it M&A related growth which has, prompted you to make this kind of aggressive guidance? I'm asking because this is a time when perhaps client spends could slow down given the impending recession. Joseph, I think you're on mute.
Sorry about that.
Yes, go ahead.
So if you look at the growth that we've projection that we provided of 25%, we've not really broken it up into organic and inorganic. We expect that from both of these sources, we'll be able to do 25%. But getting into the market condition, as I had stated the previous time we spoke, we still have not seen any major signs of slowdown or budgets being pulled back. And our experience and discussions with customer have indicated that the demand continues to be strong. What customers are doing is taking a close look at their various initiatives and the projects that they're starting, and looking at where they're going to get more bang for their buck, and maybe a little bit early, and where it has more impact on their customers. And they're prioritizing those projects or initiatives first. So it's more of a matter of moving money around. And, this way they can keep they can prioritize their projects. And if something goes wrong, they still have the ability to change. But so far, we've not, apart from some seasonal trends. If you see EduTech, typically the June to July, August timeframe is where they take a breather, because back to school, they would have just pushed out all their software and products out. So some of the seasonal trends that we are seeing, but outside of that, we've not seen any major pullback in spend, and that gave us the confidence to have our guidance at 25%.
So your this 25% guidance for FY23, can you tell us what would be the contribution organically, and how much would come from inorganic growth?
Sonia, the way to look at this is this $1 billion number was put out by us the last year after our IPO. So that was a number. And then we had also gone to the market saying that we were looking at a 20% organic growth for the next 4 to 5 years. And then maybe 15% kind of a number. But to reach $1 billion, you then do the math, it becomes very clear that you need to do acquisitions. So there was this organic growth, inorganic growth, two components coming into play to make sure that we had a consistent message, simple enough for everybody to follow. We said, let's work backwards. To reach $1 billion, you need to grow 25%. Now, most of it will come organic. There will be an element which will come inorganic, but we'll take it by the year. So that's the fundamental philosophy for our 25% number, Sonia. Now, if you look at FY23, I've finished first quarter. I've shown 30% growth, 27, 28% growth. And now I've got 3 more quarters. If you look at it, we have not announced any acquisitions, while we are looking at quite a few names and quite actively looking at them, more so even the start after the performance that we have given in the first quarter. So if you look at it, for the next 9 months, our growth will be pretty much largely organic. And that could be, if we are able to close a deal by the second, third, or fourth quarter, we could get a small element of inorganic growth baked into it. But FY25 would be largely organic, is what I should say. Organic plus a very small element of inorganic if everything goes well on the acquisition front.
Sorry, no. So you perhaps will close this acquisition by when?
No. We are looking to close it at the quickest, earliest. We don't have anything out there, but we're consistently on the lookout for companies.
This calendar year?
Keeping our fingers crossed on that.
Okay. And I hope we are the first to hear about it when the acquisition does happen.
Sure.
All right. Well, Joseph and Venkatraman, thanks a lot for joining in. We will, of course, touch base with you later. That's happiest mine. But let's move on. Mazagon Dock Shipbuilders is the stock on our radar. It posted its highest ever quarterly revenue from operations. There was a sharp increase in EBITDA along with improved margins. Let's find out what's going so damn right for them. Sanjeev Singhal, the Director of Finance at Mazagon Dock Shipbuilders, is with us. Sanjeev, thanks a lot for joining in. It was a very strong quarter for you, but we have the numbers for Q1. So tell us about the next couple of quarters. What kind of growth do you see on the top line? What is the current order book? Can you split it between shipbuilding and submarines? And what's the visibility like?
We have been maintaining this earlier also. This is a shipbuilding industry and should not be compared with a process industry. So there could be certain lumpiness. Quarter to quarter comparison would not be fair for an industry like shipbuilding. Yes, considering that we have multiple orders and the various ships are at different stages of production, so some kind of smoothing would be there, but that would be on a year-to-year basis. So I would again insist that significant increase should not be read based on the Q1 numbers. But during my last interaction, I had indicated that we are expecting a growth of 12 to 15% over FY22 in FY23. Now, considering the performance in the Q1, we are fairly confident that the increase would be 15% or would be slightly upwards. So, I again insist that whatever performance has been there for Q1, it has been a brilliant performance, but it should not be expected by the market that the similar performance would be repeated on a quarter-to-quarter basis.
Got that.
As far as the order breakup is concerned, we have a order book of roughly around 44,000 crores currently. And as far as submarine is concerned, we have already delivered out of the current project of 6 submarines, we have already delivered 4 submarines. The 5th submarine we are likely to deliver before the end of the calendar year 22, and only 1 submarine remains. So the order book has a component of roughly around 4,500 crores with respect to submarine. The balance is with respect to the other 2 projects, which is 15 Bravo, where the 4 ships we have already delivered 1 and 3 still remain to be delivered. And project 17 Alpha, comprising of another 4 stealth frigates. So in 15 Bravo also, we are expecting to deliver one of the second ships we expect to deliver within next 1 month or so. It could be a fairly early proposition.
No, got that. Mr. Singhal, good morning, Prashant here. So you said 44,000 crores is the value of unexecuted order book, right?
Approximately.
And about 4,500 crores is the submarine, which the 5th one which you will deliver.
I would correct it to 43,300 crores.
1,300. And about 4,500 is the value of the submarine, which you...
Submarine.
Okay.
Which is pending.
Which is pending. And for new ships, what's the value?
New ships, with respect to the new orders, the tenders are still not out. We have participated in certain small value tenders, and there are certain tenders which are in the horizon. Of course, as far as the capabilities and capacities of MDL are concerned, considering that we are the only Indian shipyard who are into manufacturing end-to-end submarines and destroyers, we are eyeing towards P75I, which is 6 number of submarines with the air-independent propulsion system. Approximately 45,000 crores. The RFP is in place, and the closing date of RFP is 30th November 2022. So discussions are in progress, and there are certain hiccups with respect to terms and conditions which are not being accepted by the foreign OEMs. So the discussions are going on between IHQ and the foreign OEMs, and we are expecting the positive outcome based on which this would be progressing.
What is this
big order, big tender which could be in the pipeline is with respect to the next generation destroyers at around 50,000 crores. And considering that MDL only is the shipyard which has ever constructed destroyers in India, we are quite hopeful that we are the most competent shipyard for this order as well.
And does that also get it? I mean, tenders get invited this year for that, for the destroyers?
Difficult to say. It would depend upon the government timelines and naval. But yes, it is as per their plan. This requirement
which is the first one you said? Which the tenders? I mean, the date is 30th November this year.
This is project P75I for submarines, 6 number submarines with the air independent propulsion system.
And what are your chances for that? I mean, and so you said the value is about 45,000 crores. If this gets awarded, does it get awarded piecemeal? Some to you, some to a foreign company? Does it all get awarded to a single entity? I mean, how does this work usually?
The basic structure of the RFP is that the 2 Indian companies have been identified. One is Mazagon Dock Shipbuilders Limited and another is L&T. And apart from this, there are 5 foreign collaborators who have been identified. So these Indian companies in turn have to collaborate with any one of these 5 foreign collaborators and submit a bid. So basically, there will be 2 bidders who will be participating, Mazagon Dock Shipbuilders along with the foreign OEM and L&T along with another foreign OEM. And as per the current structure of the RFP, the order will be 6-0 or 0-6. That is the entire order goes to one single bidder.
Okay, just one final question then. Any export orders that are on the horizon? Anything that you're looking to either bid for, or perhaps that has reached a a stage where you could maybe win that order? Any visibility on the export side?
I would say in the past, Mazagon Shipbuilders Limited had serviced quite a good number of export orders, but subsequently, when our order books were full with the naval orders, the focus was entirely shifted to the domestic execution of naval orders. Now, considering that these orders are going on, we have started bidding for export orders also. Our couple of bids, around 5-6 bids have been submitted. The results are awaited. In one case particularly, where an in situ part construction of a large ship is on the horizon at Russia, where MBL has been considered as a preferred partner to carry out the construction job, and the quote has been submitted. We are quite hopeful. Currently, it is under evaluation. This should be in the range of 350-400 crores.
Right. Mr. Singhal, if you can give us an idea of, in your assessment, over the next 1 year, what is the size of orders that you will participate for? I mean, tenders which may be open or will be open, but there is some visibility for projects which will be put together next 1 year.
Next 1 year, we are expecting that we will be participating in tenders of approximately 20 to 25,000 crores. We will be participating.
Okay. This includes this the submarine order, right? November 30th.
So this is excluding the submarine order. These are by and large ship orders with respect to Indian Navy as well as the Coast Guard.
Only ship orders?
Various kind of vessels, including frigates, corvettes, OPVs, fast patrol vessels, hospital vessels.
Okay, got that. Thank you very much for joining us. Good speaking with you. Defense has been a absolutely hot theme. I mean, stocks are up 150%, depending on what you want to look at. Mazagon Dock, of course, is a specialized player in that. 318, 319 on that one. It's down about 1.33%. Let's just take a look at the market. If anything has transpired, nothing at all. 5 points lower, so absolutely flat, 17,950.
Welcome back. Well, the market right now is showing some bit of fatigue. The Bank Nifty in particular is leading it, which is interesting because that's been the stronger index, so that's seeing some profit taking. IT, on the other hand, is really doing well, and some of the top gainers are from the IT space, the likes of Coforge, Tech Mahindra, Mindtree, all these stocks doing well. Tata Chemicals, the stock we spotted first thing in the morning, is still at the highest point of the morning, up about 5%. That's out of F&O ban, so that's doing well. And just look at Adani Ports. Yesterday it was Adani Enterprises. Today it's Adani Ports, which really stands out. Not that Adani Enterprises is cooling off, that also is up, but Adani Ports right now is up about 4%. Mitesh is back with us. Mitesh, been a decent first hour for individual stocks. The Nifty is still trying to buy some time, around 18,000. Your thoughts on index and your stock calls?
Yeah, Anuj, decent first hour, but I think, you are right to highlight very important point over here that it's the Nifty IT, which is clearly showing some kind of a breakout today. In fact, as the Nifty and the Bank Nifty are both taking a breather, they're consolidating. The Nifty IT has given a breakout, and I have two buy calls from the same segment. I think I have a buy on HCL Tech, which is making a fresh swing high. So that's a buy with a stop below 970 for targets of 1020. And the other one is on the chart of Mindtree, where we have spotted a good breakout happening. So that's a buy as well. Keep a stop below 35.50 for targets of 37.25.